Welcome to Furniture Industry News for December 11th, 2024. Today we have a packed episode covering several important developments across the furniture industry. We'll dive into November's retail performance numbers and analyze how the shifting holiday calendar impacted sales this year. We'll also explore the surprisingly strong holiday shopping season, with retailers reporting some of their best Black Friday numbers ever. Then, we'll examine growing concerns about potential new tariffs and how industry executives are preparing for possible changes. Finally, we'll look at the latest earnings reports from major players including Macy's and Hooker Furnishings, giving you insights into how these industry leaders are performing and adapting their strategies. November retail sales showed resilience despite this year's unique calendar setup, where both Thanksgiving Sunday and Cyber Monday fell into December. According to the CNBC NRF Retail Monitor, total retail sales, excluding automobiles and gas, grew by 2.35% compared to last year, though this was a more modest increase than October's strong performance. Online retailers led the charge with an impressive 21.48% year-over-year increase, demonstrating the continuing shift toward digital shopping. However, the furniture sector faced some challenges, with furniture and home furnishings stores experiencing a slight decline of 1.15% compared to last year and a 0.8% drop from the previous month. The National Retail Federation remains optimistic about the holiday season, maintaining their forecast of 2.5% to 3.5% growth for November and December combined. This confidence is particularly noteworthy given that retail prices in many categories are actually lower this year, suggesting consumers are purchasing more items even as prices decrease. 5 out of 9 retail categories showed positive growth, with grocery stores and clothing accessories joining online sales as top performers. The holiday shopping season kicked off with remarkable momentum as retailers across the country welcomed an astounding 197 million shoppers during the 5-day period from Thanksgiving through Cyber Monday. This marks the third consecutive year that shopper participation has exceeded 196 million, surpassing the National Retail Federation's initial projections of 183.4 million shoppers. Furniture retailers in particular saw exceptional results during this period. NFM, a division of Berkshire Hathaway's furniture division, reported one of their biggest Black Friday sales ever. The company experienced strong performance across all major categories, including furniture, appliances, flooring, and electronics, setting an optimistic tone for the upcoming year. Steinhafels, another major industry player, achieved remarkable success with total sales increasing by more than 40%, including strong performance from their new Chicago area stores. The retailer's aggressive product offerings and financing options proved effective, leading to their strongest Black Friday performance ever. Their mattress promotion, which included delivery, resonated particularly well with customers. Even smaller retailers like Sell a Cow in the Chicago area reported significant gains, with a 20% increase in traffic during the holiday period. Their creative promotions, including a free mattress giveaway to the 24th customer and a furniture trade-in initiative, helped drive customer engagement. BoConcept also saw impressive results with their modest 15% off promotion, reporting a 35% jump in sales during the Black Friday period and experiencing a 17% increase in online cart size year over year. These strong holiday results have generated optimism throughout the industry, with many retailers viewing this as a potential turning point after nearly 2 years of slower sales. The positive momentum appears to be continuing into December, suggesting a strong finish to the year and promising outlook for 2025. Tariffs have emerged as a critical concern for the furniture industry as we look ahead to 2025. With potential changes in trade policies on the horizon, manufacturers and importers are already making strategic moves to adapt their supply chains. The possibility of new tariffs has accelerated the exodus of furniture production from China, with Vietnam and Indonesia emerging as leading alternative manufacturing destinations. Industry executives are carefully weighing their options and developing contingency plans. Uma Home Decor's merchandising team is actively exploring new supplier relationships in Vietnam, particularly for products they traditionally sourced from China. They're also expanding their search to include Indonesian manufacturers, reflecting a broader industry trend of diversifying supply chains. The potential for a 25% tariff on Mexican imports is causing additional concern, especially given China's recent establishment of furniture manufacturing facilities in Mexico as a tariff avoidance strategy. This development has led some executives to believe that Mexican tariffs could be a logical next step in future trade policies. While some companies like American Woodcrafters, which sources 90% of its products from Indonesia, feel relatively secure in their current positioning, there's growing speculation about potential tariffs on Vietnam as well. This uncertainty has created a delicate balance as companies try to maintain competitive pricing while preparing for possible supply chain disruptions. Domestic manufacturing capabilities are also part of the conversation, though industry leaders acknowledge significant challenges in this area. The furniture industry's heavy environmental impact and the current labor market make a large-scale return to U.S. manufacturing unlikely, even in the face of new tariffs. Companies like Heckman Furniture, which maintain significant production in Michigan and North Carolina while also importing from various countries, are looking to optimize their mix of domestic and international sourcing. Macy's third-quarter results paint a mixed picture for the retail giant, with consolidated sales declining 2.4% to $4.7 billion. However, there are some encouraging signs, particularly in their luxury retail segments. Bloomingdale's saw positive growth with sales up 1.4%, while Bluemercury continued its impressive streak, marking its 15th consecutive quarter of comparable sales growth with a 3.2% increase. In the home category, while overall performance remains subdued, there are signs of improvement. Mattress sales are showing particular strength compared to furniture, though executives note that broader recovery in big-ticket items will likely depend on future interest rate reductions. The company expects meaningful improvements in this category to materialize in the latter part of 2025. Looking ahead, Macy's has announced an acceleration of its store optimization strategy, now planning to close 65 locations this year as part of its broader initiative to shutter 150 stores by early 2027. Most of these closures will not affect markets where Macy's is the sole department store presence. The company has adjusted its full-year outlook, raising sales expectations to between $22.3 and $22.5 billion, while slightly lowering earnings projections. Management notes that their customer base remains particularly value-conscious, as evidenced by increased clearance sales, and they expect this consumer behavior to persist into 2025. Hooker Furnishings faced some challenges in their third quarter, with net sales declining 10.7% to $104.4 million. However, several bright spots emerged across their divisions. Their outdoor furniture segment, Sunset West, achieved its third consecutive quarter of growth with a 9.1% increase in sales, demonstrating strong momentum in this category. HMI, despite experiencing an 11.8% sales decrease partly due to a major customer's bankruptcy, reached its highest gross margin since its 2016 acquisition at 20.5%. The segment also saw encouraging signs with incoming orders increasing by 8.1% compared to the previous year. The company's strategic restructuring efforts are paying off through reduced allowances, better product margins, and lower fixed costs. Looking ahead, Hooker is taking proactive steps to prepare for anticipated market improvements. They've increased their branded inventory by 40% during the quarter and are accelerating production of their top collections. The company is also expediting the launch of 3 major case goods collections, improving their speed to market by 6 months. The company is strategically building inventory levels not only for expected increased demand, but also to prepare for potential disruptions, including an extended Lunar New Year holiday in Vietnam and a possible East Coast port strike in early 2025. Management remains optimistic about the improving economic conditions, citing positive trends in interest rates, consumer sentiment, housing market forecasts, and moderating inflation levels. That wraps up today's episode of Furniture Industry News. We hope you found our coverage of retail performance, holiday sales, tariff discussions, and company earnings informative and valuable. To ensure you never miss an update on the latest developments in the furniture industry, please subscribe to our podcast. Thank you for listening, and we'll see you in our next episode.